Inflation is rising, putting families in a tight spot, and that's not the only thing. It's more important than ever to create a game plan for your money. Pfanstiel with Axias Wealth Advisors is here to share some budgeting advice that's going to keep you afloat. Chris, thank you so much for coming on to talk about this.
Thank you for having us.
I think that we all know that we need to have a money plan, but we found ourselves in this situation not really expecting that we would be here. For so many people, a lot of people are in over their heads right now. So is there a light at the end of the tunnel? Can I ask you that to start?
Yeah, and there will be, but it takes time.
Right.
So a lot of folks that are buying houses or cars or whatever it might be, big purchases right now, they're getting advice maybe to buy it anyway and refinance when rates fall. And you can do that, but that scares me a little bit.
Right.
Only because we don't know the timing of rates falling. Also, the rates were, risen. The Fed rose rates to help fight the price of things and let everything else normalize.
Right.
And they do that to dissuade you from buying more things.
Right.
So if you're buying when both rates and prices are high, it's just an inopportune time.
It's almost kind of keeping us where we are and on this same path, right?
Yeah, so if the Fed's trying to tell you, don't buy now, don't feed into the rising rate or the rising prices and the bidding wars on all of these goods, that's their way of telling you don't feed into it.
Right.
So the economy will be healthier if folks are a little bit dissuaded from some of those purchases.
Maybe be a little bit more conservative, hold off on some of the bigger purchases.
And if you can.
Yeah.
If you can, absolutely.
Well, and truly, like if you're in a situation where your rent is getting too high and you feel like you need to get into a house to maybe stabilize what you're paying every month instead of rent, mortgage, when it comes to these bigger purchases, can you still do it? Is it a bad idea?
I think if you were evaluating the purchase solely financially, we would say it's probably inopportune.
Yeah.
But if your car doesn't start, you need to get to work, you're buying the car.
You're buying the car,
If
right.
you have twins on the way and there's not enough bedrooms, you're going to buy the house.
Right.
And sure, you can hope to refinance when times are a little bit better with interest rates and borrowing, but you can't just look at it financially. If it's the right thing for your family, you're still going to do it.
You're still going to do it. All right, so let's talk about a lot of people living paycheck to paycheck. Saving is so important.
Yeah.
How do you make that work? How do you plan for the future or plan for emergencies when you can't even maybe get gas in the car every week?
It's going to be different for every family, right? Some folks are paycheck to paycheck, but there's room in that budget. There's things they could control. And so for everyone, I would start with the old adage of just pay yourself first. If it's retirement that you're not addressing at all, just log into the retirement plan at work and move 1%.
Right.
But get in that habit. And then 1 can become 2 and 2, 3 as time goes. If it's building your emergency fund, set up an automatic movement of that money. So when your paycheck hits checking account, sometimes your employer will put a piece in savings as well for you, or set up an automatic transfer at your bank or credit union to move it automatically. But paying yourself first is really important. And that's one of the only ways to build that habit, because otherwise the excuses will be there. It's inflation today, it's something else tomorrow. So you have to be proactive.
And a lot of people are talking right now because the student loan payments start back up next month.
Yeah.
What should people know? What should people be doing now?
So if you're really worried about that payment amount, we first want to go back and look at the new plan called SAVE. For federal borrowers, you've probably gotten 9 emails about this already. But there's a payment plan called SAVE, which is going to be a lower payment for the majority of families that are in the income-driven repayment plans. Now that said, if it's just not the right time, there is a job loss, there's other problems. The administration's also offering what they're calling a long ramp-up, where there's basically no monthly obligation. Your loans will pick up some interest for a year.
Time. Okay.
But there's a 1-year on ramp. So if you're really in trouble, you might have to call the servicer. The hold times are long, but we have ways through that. But I would at least learn about the new payment plan to see if that can fit in your budget before deciding to take the on ramp.
I know that there is no crystal ball here, but in your experience and seeing where we are right now, do you see any relief in sight? Do you see any kind of pattern here and when we might see interest rates start to fall and things normalize?
So what I can say with confidence is we've seen several what's called inverted yield curves,
Okay.
which is where when you look at interest rates, used to be a short-term loan was lower and a long-term loan was higher, right? We're kind of seeing it go like this. And that trend often will lead to an economist saying rates will dip. We just don't know if it's one more rise before they dip or not.
Right.
So the end to be in sight, but I wouldn't go as far as to say in 3 months, in 1 year.
We just don't know yet.
There's
but it's
just
coming.
some good indications that rates can fall.
Chris, thank you so much. Appreciate you coming on to talk about this. And to learn more about Axias Wealth Advisors and find out how they can help you achieve financial success, you can head to our website, kdka.com/talkpittsburgh for more information. We'll be right back after.